One of the things I think we underestimate with Amazon is how big advertising is for the company. This is basically a business that didn't exist a decade ago, and now it's actually driving the company's profit. If you take out advertising revenue, which should be very, very high margin for Amazon, the company is not profitable. That is just a fascinating thing to say for a company that is as big as it is. But what is Amazon's advertising business, and how does it impact their retail business? Because at the end of the day, the core business for Amazon is still being an e-commerce company. So where does the money come from for advertising? That's what I'm going to dig into today. My name is Travis Hoyam. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video's sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. I first want to put Amazon's advertising business into context to the size of the business overall. You can see in this chart, purple is advertising services revenue. Now, like I said, advertising services revenue should be very, very high margin because the company isn't actually spending anything, not buying any goods to offer up that digital space. Yes, you have to build out the infrastructure, but like other advertising platforms, it should be very, very high margin once it gets up and running. But that advertising revenue outstrips the company's North American operating income. Now, that does not include and their international operating income. What that does is that pulls out AWS. So those two segments added together, and I have them stacked on this chart, are basically the profits coming from the retail business. And you can see that advertising, which is included in the revenue for North American and international retail, is much, much higher than the operating income. Subscription services revenue also much higher than operating income. As a result, advertising and subscription services, aka Amazon Prime, are really subsidizing the e-commerce business. So that's just fascinating to think about. And when you think about the advertising business, this is something that Amazon has basically just tacked on over the last few years. I'm going to pull up a chart just of advertising. And they only began reporting this in 2019, so we don't have a ton of data, but you can see that there has been tremendous growth, more than 3x in size, nearly 4x since 2019 for the advertising business. But who pays for these advertisements? What are these advertisements? This is where it gets to how advertising is actually impacting the experience on Amazon.com. And that's where I think we need to think about this a little bit differently. This is a look at a search for Bose headphones on Amazon. What you can see here is you don't actually see Bose headphones until you get to the bottom of the page. The first thing that comes up is this advertisement from Sony. I've done this previously and I get advertisements from JBL headphones. You have to go down to Bose. You have to go down into the results before you see Bose headphones. And even after that, you're going to see Beats headphones. You're going to see other sponsored. These are advertisement headphones. These are not going to be all organic results. There's going to be advertisements put in here. Let's try another search. This one is for Duracell AA batteries. Now what you notice here is all of these search results on the top are for Duracell batteries, but they're also all sponsored. So Duracell is paying to be at the top of the list. Again, I have done this in the past and you get other results. If you just change the search to Energizer batteries, and now you're starting to see Duracell batteries pop up. So it looks like Duracell increased their spending on advertisements on Amazon since the last time I did this search. Let's try another one. Pampers diapers. You can see that Pampers is not really prevalently shown here. There is a couple of options, but one of them is sponsored. This one on the left is actually a sponsored link from Pampers, but then you have Huggies, you have Honest Diapers. What you're actually looking for, I'm explicitly saying I want Pampers diapers size 2. That is not what Amazon is showing me. They're showing me different brands. They're showing me other products who are paying to be at the top of their search results. This is very different than the consumer-centric company that Amazon was built to be. And I think this is where you have to think about advertising as a business and how it impacts the consumer experience. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. One of the reasons I find these advertising numbers and the results that we're seeing on Amazon.com so striking is because this was built to be a company that's supposed to be consumer first. Amazon is supposed to be showing you the best products for you. And what they're actually doing right now is showing you a lot of advertisements, ways to goose the amount of money that they're making on the platform. Where does that money actually come from? Well, if they just showed Pampers diapers or Duracell batteries, when that's what I explicitly search for, those companies wouldn't have to pay to be at the top of the list, and they could charge an appropriate margin. Let's say they need to make a 30% margin, gross margin on their products. They could charge a price that would get them to a 30% gross margin and go about their day. But now they're having to pay to be at the top of the list that they would otherwise organically be at the top of the list. Let's say Duracell batteries costs $10, but they're paying $1 for that advertisement space. Now to get to your gross margin that you need, you actually have to raise your prices. The other alternative is to make less money and charge lower prices and have a lower gross margin. None of these are really great options for companies that are on the Amazon marketplace. And Amazon has become a marketplace. It started as a company that would buy inventory from other suppliers and then serve that inventory to customers. But now, most of the time, there's either first party or third party inventory on the marketplace that Amazon is in some ways controlling, is actually serving to customers, but they're not actually taking the risk in most cases. They're not taking on that inventory risk that most retailers do. And so that gives them an incentive to serve you more ads, obfuscating the fact that that's not actually what you search for. That may not actually be the best product for you. And the other thing that didn't show up in these searches, but a lot of times what you're seeing is products on the marketplace that are coming over from China, things that may be knockoffs, products that may be mislabeled. This isn't something that a company that has the scale of Amazon can take 100% ownership over because they have thousands or maybe millions of SKUs on their website. So they're not going to be able to check the quality of every single one of those products. So has the user experience gotten worse? I think the answer is probably yes. Has the supplier experience gotten worse? Is Amazon squeezing more of their margins by inserting more and more advertisements into the ecosystem? I think the answer is also yes. So now you have a marketplace where you're maybe not the best place for shoppers. If I'm going to look for a direct product that I want, maybe I'm a little bit more inclined to go directly to a company's website now. But from a supplier perspective, there's even more of a challenge because do I even want to be on Amazon? And this is where I think Amazon has gotten to the position where it has the scale that it has. It has the Prime members who are going to be continually coming back to the Amazon platform. So a lot of suppliers just simply have to be there, but they're going to have to charge an appropriate price to be able to be profitable long term. And this is how you get to Amazon actually being a little bit more expensive than a lot of their competition, which isn't really in service of consumers, but it is in service of their bottom line. So understanding how Amazon's business model works, how advertising and subscriptions feed into it, I think is very, very fascinating. I know I'm in the minority here, but we canceled Prime a couple of years ago, in part because we didn't have a lot of value in getting products in 1 or 2 days. So why not just save that Prime membership fee, make sure your order's over $35, and stuff will get here with free shipping anyways, typically in maybe a day or two longer than it would otherwise. But these changes in the user experience are one of the reasons that we canceled. Again, I know I'm in the minority here, but this is what happens with platforms. You end up squeezing more and more out of the business by either squeezing suppliers or squeezing customers. And that's how you open yourself up for competition. I think that is an interesting place for Amazon to be today. And it's because of this advertising tax that they have put on the business. What do you think about Amazon's position in e-commerce and the role that advertising has played in the business? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.